there's just this perception that the government is just out to take money out of my pocket, right? And so there's this love-hate relationship where most business owners, and again, I am being intentional, I'm using the word business owners because the tax code has nothing to do with a W-2 9 to 5 worker. There's nothing for you. Pure and simple. I'm sorry to say that, but that's the reality. It's not designed for you. It's not beneficial at all to the person who is just doing a W-2 job, going to work and getting a paycheck. No, that's not who the tax code is written for. The folks who wrote the tax code are the big boys. They wrote it for themselves. They wrote it for it to benefit folks in their club. And so the thing about the tax code is if you want to get the benefits that the big boys get from it, you got to learn to follow the rules and play by the rules that they have designed for themselves. Okay, so, and the good thing about our tax code is it's fair. It's not discriminatory. What I mean by that is if you behave like the big boys, then you can get the same benefit that the big boys get.
Who's this? Oh, you're an entrepreneur? Oh, you're a real estate investor? Oh, you're trying to learn from those who did it? Well, come into the lab then. Put your white coat on, gloves on, notepad, and let's build, y'all.
Experiment Nation, if you're looking for the right who when it comes to playing defense, they say good offense wins games, defense wins championships. And if you're trying to win championships when it comes to building your wealth, you're going to have a tax strategist that does just that for a living, helping people, saving clients on average 31,000 plus in taxes yearly, focused on entrepreneurs seeking financial freedom within 5 to 7 years with a proven blueprint. This gentleman not only has worked in the San Francisco Bay Area with a lot of his high net worth clients, some of them W-2 earners, some of them entrepreneurs, but he talks about the importance of how the tax code is not only dynamic and one that should constantly be studied and not be one where a professional that you may be working with is resting on their laurels. You want someone who's actively learning the tax code, as dynamic as it is, because behind where the money flows is a tax code tied to it. And it really hit me when he talked about that, because I really thought about it. Even the real estate game that we play in, we play into this game because it is tax code friendly. And there's a reason why there's a preservation of wealth is tied to real estate. It's because it is built by those who benefit from building an infrastructure tied to real estate that is literally tied to the tax code. Now, it's been true and proven for the time years that it's been consistently tied and will always be, because it's a hard asset, and the tax code rewards those who invest in our communities because of all the benefits of property taxes, etc. But it's not just real estate. There's other areas too as an entrepreneur where you can truly benefit from being a creator and creating an outlet for others to benefit from, driving the economy. And if you don't have someone on your team that can help you be the catalyst that you can be in your ecosystem, in your specific industry, there are some areas in the tax code, multiple areas, not some, multiple hundreds, thousands of areas with respect to the tax code where you can actually maximize and be able to, again, strategically save on your taxes because you are doing all this contributing. Remember, in this episode, he talks about W-2 ain't the way, but for those who are W-2, there still is a way to still be able to benefit from the tax code if you have someone on your team, keyword, someone on your team who's being able to actually specifically strategize on your behalf. And who we had on our team and in our lab today was Michael Uadiale, who is a CPA, financial chartered accountant, and as well as a true professional who's able, as a chartered Institute of Management accountant, chartered global management accountant, is an individual who literally lives and breathes taxes And that's who I want in our lab. And that's who we brought in our lab to give you the insight as to who it is that you should have on your team to be able to reap the benefits of the tax code. So without further ado, Michael Uduale here in the lab with us. Stay tuned, y'all. Here we go. Yeah, everyone's been who's I don't know how long you've how long you've been hopping on podcasts. Is this the thing that you do, or is this
Ah, geez, I've been on different podcasts since last year, so I kind
yeah,
of find myself doing anywhere from 3 to 6 podcasts every month. So
yeah. Do you
I
like the
don't.
ROI on that, the return on your time and energy and everything? How do you like it?
Yeah, it's easy for me.
Mm.
The funny thing with podcast is really funny in the sense that you have no idea who is listening to that podcast, and then honestly, I think that's the scary part in a good way for me,
Yeah,
because and then somebody reaches out to you and says, "Yeah, I was listening to you on a podcast and let's talk." I'm like, "Oh, okay, what podcast?" They can't even
yeah.
remember. I'm like, okay, nice. All right, but let's do
That means
business.
it's working. That's a high ROI. That means it's working. So you know what I love about that, and what I love about that, uh, Michael, is we uh no was it no like and trust or whatever, building that relationship. Apparently people need about 9 different touch points with you, and to spend around, like, I don't know if it's like 8 or so something hours with you. And with the power of social media, like, our YouTube channel, people spend about 8 hours a day with us, right? And like, I don't even know who they are, and they'll say, "Oh, I know you. I've heard it." I'm like, that's really cool because it means that they already have some context where you're coming from, and it makes the conversation or being able to do business with so much easier. So
Mhm.
I think it's a really good time to be alive in the sense that we have these platforms and we have these voices. And I personally, when I started this show, was kind of almost for selfish reasons because I really wanted to get in touch with the people I really wanted to be close to and admired and really wanted to learn from. And then the fact that a community came out of that, I'm just very grateful that other people are finding value from these conversations. So here
Yeah,
we are.
it's interesting. Yeah, I do get some very significant ROI from podcasts.
That's awesome.
So that's why I don't even really have the motivation to start one myself. Even though some people are like, "Oh, are you not doing your own podcast?" I'm like, "No, I'm already too busy enough worrying about people's taxes." All right.
Yeah. So tell me, how did you tell for someone who's listening, who's tuning in? I know we had a great chat just now. You are currently based out of Georgia. It's easy for you to go back to the motherland. You used to be based out of the Bay Area as well. You spent time there, 20 plus years, right?
Yes.
You came back to Georgia, and yet you say you still have an office there. Is that tied to what you're doing today, or is that another office? And what would you say to someone who is like, what do you do for a living? What do you tell them that you do?
Oh, I'll frame that this way. I help people get to their financial freedom faster than they ever thought would be possible, leveraging the tax code. That's
Hmm.
what I do for a living.
Love that. Let me ask you, because I'm um, I like sports. I played basketball until college, and one thing I used to always hear is, offense wins games, but defense wins championships. Um, when I think of taxes, I think people don't always think about it. People always want to think about, okay, I need to make more money, but I also feel that, and maybe you can correct me if I'm wrong here because you are the expert. I feel like maybe not as much attention goes towards playing defense, for lack of a better words. What are you seeing? That's just my perspective. Are you seeing that, or is that actually just I misstated that? In as a matter of fact, you're seeing more. Maybe people don't even know the tax code, or like, what are you seeing that is like a big man? If I could just shake people and tell them to pay attention, what would that be? What's the first thing that comes to mind?
I appreciate you asking that question. Honestly, if there's one thing I have really enjoyed the most in just making the round with podcast, it's for that primary reason. The reason being, most business owners have a very counterintuitive perception of what taxes is all about. There's
Mm.
just this perception that the government is just out to take money out of my pocket, right? And so there's this love hate relationship where most business owners, and again, I am being intentional, I'm using the word business owners because the tax code has nothing to do with a W 2 9 to 5 worker. There's nothing for you. Pure and simple. I'm sorry to say that, but that's the reality. It's not designed for you. You just want to.
When you say for design for you, do you mean it's not beneficial to
Yes.
you? Is that what you mean?
Yeah,
Huh.
it's not beneficial at all to the person who is just doing a W 2 job, going to work and getting a paycheck. No, that's not who the tax code is written for. The folks who wrote the tax code are the big boys. They wrote it for themselves. They wrote it for it to benefit folks in their club. And so the thing
Mm.
about the tax code is if you want to get the benefits that the big boys get from it, you got to learn to follow the rules and play by the rules that they have designed for themselves.
Mm.
Okay. So, and the good thing about our tax code is it's fair. It's not discriminatory. What I mean by that is if you behave like the big boys, then you can get the same benefit that the big boys get, right?
Mm. Love
But
that.
most small and medium-sized business owners, they tend to think, well, this thing is meant for the Amazon dealers, it's meant for the Apple, it's meant for the IBM and all those big companies. My answer to you is no, that's not correct. The code is there. The government set the tax code as a way to incentivize people to behave the way the government wants them to behave. All right?
Mm.
So when you choose to behave the way the government wants, and when I use that word behave, I'm talking of investing. What the government uses the tax code to do is like pulling strings. And on the basis of the strings, they control the thing that everybody's seeing. I'll give you a breakdown or an example. During COVID, the restaurant industry took a hit, right?
Mm.
Nobody was going out to eat. What did the government do? They changed the tax law for that period to say, well, if you go buy food from a restaurant that has a sitting facility, even whether or not you sit down to eat, the idea that they have a sitting facility and you came there to buy food, that food will be 100% deductible on your business expense. Whereas before COVID, that law by default was 50%. What were they doing? All they were doing is incentivizing people to go spend money in the restaurant.
Mm.
The last administration was a big deal for them on the green economy. And so what did they do? They came up with the Inflation Reduction Act. What did they put in there? They put a lot of incentives to cause people to go invest in anything solar and stuff like that. So that's what the tax code is. If there's anything that has made real estate to be successful in the United States, it's the tax code.
Wow, wow. So
So people must
it's
learn
yeah.
that.
You know what's fascinating about that, Michael? Like I never even realized, and and I never realized that you're essentially saying that the foundation of how things are structured kind of go back. And when I say things, I think I'm thinking like macro and micro economy is
Mhm.
kind of tied to the tax code. Because if real estate wasn't in sync with the tax code and beneficial, you wouldn't have as many investors invest in real estate. You'd have maybe if you were giving some incentives for buying businesses, then people would go there, right?
Yeah,
And so it's so interesting. I've never even thought about it this way. It's like the real puppet master, for lack of better words, is the tax code because we kind of want to go along with the flow of currency and not go against the grain.
yeah, yeah. So because think about it, the government does not want to be the one
Mm-hmm.
investing in housing for its citizens, right?
Mm,
The government doesn't want to take on that responsibility. But what are they doing? They create the benefits for folks who are willing to invest. So
yeah.
I always say, always look at what a government is doing and drive or align your investments with the priorities of the government because they are going to give the tax codes or laws that will be beneficial to the things that are of interest or importance to them.
Okay, so let me ask you a question, Michael. This is so good, man. I can tell I'm already having fun. So if I hear you say that,
Mhm.
first thing that comes to mind is there's got to be some stuff that have stayed true and true over time
Yes.
that isn't, for the most part is gonna stay the same. And one, I can attest to it. Real estate has a lot, like we're seeing 100%, bonus depreciation coming back in, cost segregation, all that. This is stuff that we've taken advantage of as investors. Amazing. So that sounds like real estate is always going to be for, and again, I'm just making an assumption. It's for the time being, it's always going to be aligned because it's an asset. It's a hard asset that helps the economy, taxes, all that stuff, right? It's so funny because I took a wealth and poverty class in back in school. This was one that I remember it stuck out like night and day, and it said that these great neighborhoods, right? Like property taxes are directly there's a direct correlation to the quality of education because when you have these $1 million homes, etc., guess what's that helping fund? The school system. So I'm like, oh, like I didn't. So you start putting pieces together, and you're like, okay, that's property taxes, etc. Good schools,
Yeah.
good teachers only want to go in good schools because they have the best funding, and then you start realizing everything is connected. So let me ask you a question. Is there, if I'm listening to this and you said you should pay attention to what the government is doing aligned with the tax code, where do I go? If I'm listening to this, I'm actually pretty fascinated about what you just said. How do I keep track? How do I know if the government is for AI or is against it? How do I know if, like, where do I go? Where should I start? If I'm listening to this, I want to get aligned with the government because I'm smart enough to hear what you just said, but I don't know where to go.
I know this may sound self-serving, but my answer is simple. Have a good tax advisor.
Who, not how.
Exactly. You've read that book, right?
Yeah,
It's the
absolutely.
who, not the how. Right. So,
Mm.
because I wish I could say all of this. My profession, unfortunately, have many people that carry that three letters appellation CPA after their names, but I almost feel like they stopped learning a long time ago.
Ooh, I love that. I love that. Ooh, that's so good.
A good tax advisor has to first of all sit with their prospective client or client and understand what is this person best suited for. How
Mm.
do you want to make your money? What is your natural inclination of makeup? So, for example, in our practice, we give our clients what is called the Kobe test. The
Mm.
Kobe test, we are not psychoanalyzing you. All we're doing is we're trying to understand what is this person's natural way of solving problems,
That's
and
really
what
interesting.
what does that kind of personality best get suited for when it comes to investment. Because
Mm.
if we are able to know that and we show it to you, then we can truly answer for you whether or not your makeup as a person is well
Mm.
suited for that line of business. But to your direct question, that's what a good tax advisor should be telling you. There are areas of businesses, they are great, but there may not be tax benefit there. Now, when you ask me before we got started, what do I do for a living? I said I help people get to financial freedom. The
Mm.
reason why that is my focus is if you, as a business owner, truly get proactive on managing your taxes, I guarantee you will be able to reduce your journey to financial freedom by as much as 18 years. The wealthy, the ultra wealthy, they don't take their tax bill on the surface. They are intentional in everything they do to ensure that they are maximizing the tax code to their benefit. Because for most people who have no planning to do on their taxes, you know what's going on? For the average 8 hours of work every day, you putting in 2 hours and 46 or 47 seconds of that time paying the tax guy. That in a lifetime of work is over 15 years in the tax jailhouse.
Jailhouse. I like that.
Yeah. So
Wow.
there isn't, oh, this is the best area. Yes, you're right. Real estate has stood the test of all times.
Time.
It will continue to be. Now, this new tax bill have just turbocharged it with 100% bonus depreciation and all of that. But guess what? With that 100% bonus depreciation, it does not align only with real estate. What very entrepreneurial and innovative people are doing, they are designing and packaging business deals that is able to leverage that 100% bonus depreciation, not just only from depreciation perspective, but from leverage. I mean, I can tell you literally about 80% of the custom tax strategies that I'm using from now till December 50 when I shut down, they are like being supercharged by that 100% bonus depreciation.
Experiment Nation, you've heard me talk about how multiple investors across the nation are landing these lucrative midterm rental insurance contracts by making these small tweaks on the branding and marketing side, especially if you're an existing short-term rental operator. There is a quick and easy shift that you can make with the ride guide in place. And because we've launched a 2-day boot camp that not everyone could attend in real time, I've put together a recording where you can get all the materials and all the guides to focus on rebranding either your short-term rental business or your current midterm rental business so that you can actually have the insurance companies reach out to you. And then day 2 is if you want to actually play offense, how you can reach out to them by listing on the right platforms, etc. If you're looking to get this MTR bootcamp so that you can start optimizing and you can start receiving these lucrative contracts that again provide less headaches, less turnovers, unlike the Airbnb space, you can start receiving inquiries today by having the right guide in place. So please go to experimentrealestate.com/MTR bootcamp or click the link in the bio to make sure you get your hands on the midterm rental insurance bootcamp to fast track your way into landing these lucrative insurance contracts the exact same ways multiple investors have taken advantage of this unknown and untapped niche within the midterm rental umbrella. Can you enlighten us? Because I think this would be, first of all, just to make sure that what you just said didn't slip through the cracks. I love the perspective of if you work a 9 to 5 and you're working 8 hours and you're not, again, this is
Plan.
why you're not, you're 2 hours out of those 8 days are really you're
2 hours out of
work.
yep.
That's insane. Like that perspective, I think should get people's attention.
Yeah.
I but I also don't want to forget what you just said about the 100% bonus depreciation advantages and other beneficial strategic ways to leverage that. But if someone is listening to this, so I don't forget this because I think it's very helpful. Is it and I should add a business or I should add a business? Like what's the, again, everyone's goals are different, but when you see that very blatant statement is, and again, owning a business is not for everybody, but like if you are, you are a fellow chartered accountant, chartered global management accountant, right? CPA, like you have all the credentials and you continue to see this pattern for someone. I know we're going to go to business because that's where I love to spend my time, but I also don't want to leave my folks out who are W2s. Is there something that they could do differently if they actually, maybe they work at a big tech company and they loved it? That's what
Yeah.
they do.
Yeah.
What can I do? Because 2 hours out of 8 doesn't sit well with me, and I'm a numbers person. So what can I do?
Great question. So there are still things they can do. All right. So full disclosure, we have employees in Facebook, Google.
Right. They make big, they're paying some people 7 figures, right?
Yeah, I have literally most of my Google employees,
Wow.
they are paid 7 figures.
That's
Okay.
insane. Stock
So
options, or well, actually, hold on. I'm
yeah,
getting ahead. All right.
yeah.
Finish.
So there are still things those kind of people can do. Not very many things. Again, this is where it boils down to working with a good tax advisor.
Mm-hmm.
Now, to talk about those folks who are in the W 2 zone, let me start by breaking it down, or let me unpack it for you. All income are not equal in the eyes of the tax law. Okay, what do I mean by that? If you make $100,000 and I make $100,000, two of us, same amount of money, those two amounts of money can suffer taxes at completely different tax rates. And the reason why that is so is what is the character, what is the nature of the 100,000 that you and I made. So the first thing people have to learn is really understand that the Internal Revenue Service puts income into four different buckets. There's earned income, there's ordinary income, there's capital gains, right? And there's portfolio income. So knowing that is a good start point. Now, to bring that to the so-called 100% bonus depreciation, right? Because you or somebody is making a W 2 income, it is what is called active income. The way such a person can leverage the 100% bonus depreciation, it doesn't mean the person necessarily have to go start a business, because somebody who is making a million plus, he really doesn't have anything to do with a business. He or she is doing really good, right?
Yeah.
That person's
Better than most small businesses, because there's
right.
actually not that many businesses making seven figures,
That's
which is
true.
crazy.
Yeah, there are
Yeah.
like, I mean, the day one of my coaches told me the percentage of business owners that make over seven figures, I was like, because he was trying to make us understand, you guys are powerful. You need to understand you are a very small fraction of the society. But that's by the wayside.
Yeah.
My
Yeah.
point for the W 2 guys, there are custom tax strategies that will allow them generate active losses. Okay? Because the income they make is active income. The only way they can legally, ethically, and morally reduce those losses is to generate active losses, because it's income of the same type.
Mm.
Otherwise, you will run yourself into the frustration of going to do what your uncle or your friend is doing. And then when it's tax time, somebody's telling you, oh, yeah, you made this loss quite all right. In real estate, that's a very common example. I have dentists, doctors, physicians, right? They hear people say, oh, real estate gives tax benefit, but they don't understand how it works. And then they go buy real estate before talking to a good tax advisor. And then they come to you and you're like, well, yeah, you got this, congratulations. But what you have just stockpiled is passive activity losses that
Yeah.
you cannot utilize.
Yes.
So, to the W 2 person, there are what we call custom strategies. Custom because they are not just there on the street for everybody. There are good service providers who design all of these custom strategies. Some of them even have what we call private letter ruling, meaning the people who design these strategies literally take it to the Internal Revenue Service and say, okay, guys, this is something we want to put out there in the marketplace. Is it going to meet you guys' approval? If not,
Wow.
tell us how to make it meet that approval. And then
Wow.
they get that PLRO from it, a private letter ruling. So these are things that we do with most of our W 2 wage earners, because, yes, I have folks working in Coca Cola who are making millions. They don't need to go start a business. The key thing is they need to find things that generate active losses. Will they spend some money on it? Absolutely. But if somebody is spending 100,000 and that 100,000 helps him or her reduce their taxes by, say, 200,000, they have gotten an ROI on their money over and above what most business people will make on their business,
Yeah.
right?
You,
So there is
uh,
something for the
mhm.
W 2 wage earner at that level.
So you said PLR,
Ruling.
private letter ruling,
Yeah.
Michael, and then I heard you say this. I want to make sure I heard you loud and clear. You're saying the private letter ruling, is that something that's done at the individual level, like you literally
No,
have a representative, or it's a governing body that says we're going to go on behalf of these folks and we want to know if we can push this as a law. Like, I'm trying to understand how the
Yeah.
PLR is
So
rolled out.
somebody could design a strategy and say,
Mhm.
okay, this is what I'm trying to put together. And to avoid having a situation where you bring participants or taxpayers to come and be part of what you're doing, you go to the Internal Revenue Service first and say, okay, guys, I want to put this out there. Tell me if it meets your
The
requirement.
guideline. Yeah.
Okay? It costs money. First of all, you are going to get a tax attorney to write and present that PLR to the government. All right. The IRS has a department that reviews those things.
Wow.
If they think they should tweak it or you need to make some changes, then they tell you what they are and then you fix it and you go back. Once you get that private letter ruling, for example, that is a covering for anybody, for
Okay.
example, who does a similar structure following that same fact pattern.
Wow, wow. So are you then saying, Michael, that like our tax code system is actually pretty like dynamic?
It is very dynamic. It is the tax code is written by lawyers. Lawyers are very so this is one of the problems I think the CPA professions or professionals face.
Yeah. Because if you're outdated.
CPAs are very logical, right? For the average CPA, 2 plus 2 has to be 4.
Hmm.
But for the attorney, 2 plus 2 can be anything you want it to be.
I love that.
Okay.
Wow.
And so the tax code is written primarily by lawyers. So they play with words, and that's why it's such a very important thing that any tax advisor really needs to know the code. You see, unfortunately, a lot of CPAs impute into the tax code what is not even there.
Are you saying there's a good chance that some things are either, so I'm hearing two things. Some things can either be outdated or it's what they know. And so they're not up to speed with what, by the way, yes, 2 plus 2 equals 4. But if you were up to speed, 2 plus 2 could also equal 5. And you're saying that the CPA that's not as competent might not know this new private letter ruling that's been put into play.
You use the operative word competent.
Mm,
So let's use a very common example that I think most of your audience or listeners can relate to who are
mm.
business owners. I can tell you how many times I have asked new clients why they are not taking a very fundamental basic thing like the home office deduction.
Right.
And
Literally.
guess what the answer is? 7 or 8 out of 10 times.
Can I guess?
Yes.
My CPA never told me.
That's one. Some would more most answer is my CPA says it's a red flag for audit.
Oh.
Like, what are you talking about? I mean, this thing has been codified since 1986. The 2017 tax law even made it simpler and created a lot of roadmap and pathways to be able to have that. Or I mean, it's like when you hear some of these things, it just make you cringe, right? So that word competence is the operative word because if I'm not a good swimmer, I might be taking risk going to the 8 feet part of the pool.
Ooh.
But if I'm a good swimmer, I want to be in that deepest end of the pool because that's where I feel the current of the pool more than 2 feet. So in the profession, most CPAs are kind of like schemish. I think they work for the Internal Revenue Service. They are not there to represent the best interests of their clients. Okay, you kind of kicked off some words: bonus depreciation, cost segregation. I was working with a dentist in New Jersey, and I asked her just some weeks ago, why didn't you do a bonus depreciation? I mean, cost segregation
Your equipment.
on your building because
Yeah.
she owns the
Oh,
building
yeah.
from which she
Sure.
operates the dental practice. Guess what? She said that former CPA said it was not worth the squeeze. I'm like, what are you talking about? Because I first had to do a cost segregation on the building. Yes, she spent about $4,000 doing the cost segregation. But guess what? She's getting no less than $54,000 reduction in her taxes by reason of
100%.
that cost segregation she did. But
Mhm.
somebody who is a professional had previously told her not to do that.
Yeah. Why is that? Is it because we work with a um, cost segregation firm? It's an engineer firm,
What's their
right?
name?
Core.
No,
Uh,
I refer most of my clients to ETS.
okay, yeah, we work with Core. They're
Mhm.
Core advisors, and they're super. I actually met my EA that way. I'm an enrolled agent, so someone who knows kind of like, I mean, this, and maybe we can even talk about that. And having interviewed this gentleman, and I know him very well now, a good friend of ours. It's it's an engineered kind of process. It's not even like it's not like that business impedes your space. There's no competition. Like they're doing their thing and then you bring it together, right?
Yeah,
So
absolutely.
I why
Absolutely.
what's the pushback, Michael? Like what are you hearing from your peers in your industry? Is it because it's too much work or like why would you if you're fiduciary to your client and you owe them
That
their best
responsibility.
interest, why would you not tell them to go speak to that professional? It's not like you have to get like some kind of certification. Like I don't understand that.
So again, I've had some of my friends come back at me and say, "Hey, Mike, you dissing us when you come on this your podcast." I don't know the answer. I can only hazard a guess, and my guess is a lot of people sit for these exams, they pass, and that's the end of it, right?
Mm,
I mean, I was on a call with another dentist last week with an attorney in Utah, and he was talking of a new medical condo that he wants to buy. And I'm like, oh, okay, how much are you going to spend on it and all that kind of stuff? I'm like, okay, I will need you to do a cost seg on that property. The moment I said that, the attorney who was on the call with us said, oh, okay, Mike, I have great respect for you, say, because 8 out of 10 CPAs that come on conversations with me and my clients, they will say no. But to hear you say yes, and you quoted the section of the code that makes it needful and relevant for the dentist to do that cost seg, then you know your onion. So I can only hazard a guess that it's something to do with knowledge. And when people don't know something, their best or safest way is to avoid it.
mm,
I mean, full disclosure, if I'll be honest, okay, when did I start really doing COSEG? I started doing COSEG, I think 2012 or 2013. But I
mm,
had practiced for like 7 years before then.
mm.
Okay. I
Yeah.
mean, I'm being honest with you. I
Yeah,
had
no, it's
practiced
good.
for
Yeah.
like 7 years before then. And then somebody came to me and said, but Mike, are your clients doing this? And I had to go back and read the code again. And the unfortunate
Mm.
situation really is the cost segregation is the actual technical way the code requires you to do depreciation.
Wow.
The only reason why the government is not chasing after people who are not doing it is because they make more money from those who are doing it wrongly.
Wait, you can do it incorrectly, as in like,
Yeah,
and Mhm.
incorrectly meaning, yeah, you buy this building, you bought this building for 1 million. Okay, the land is 20%, 200,000. All right, the balance that is depreciable is 800,000. Great. What is this building? It's a commercial building. Then depreciate that 800,000 by 39 years. The government is fine with that because you who have invested that money, you are taking a smaller bit of depreciation every year over 39 years,
Instead
right?
of forced, yeah,
Instead of doing a cost seg that allows
accelerated.
you to classify that building into 4 classes, and everything that is below 20 years, you can write it off in year one. You save that boatload of money
Yeah.
and go buy your next property.
Yeah. Oh, that's so good. So okay. I want to go back to the thing that you said. And so thank you for sharing that about. I think the lesson here is always who, not how. And we said this before we got on the show. Like we were setting up the lights. Like I let my team tell me what to do, right? And so if you're
Yeah.
gonna hire someone, have them tell you what to do. And if they're not being proactive, I think again you have to earn the business. I think you should second guess. You know what happens too? Maybe you've seen this before too, Michael. Before I go back to the thing that you talked about, Mike, about the 100%, because I want to know what other areas we're not even thinking of. Sometimes people get complacent with relationships. They're like, "Oh, but I've been going to this guy for years," and it's like that doesn't mean he's good for you or she's good for you. You know what I mean? Like, I'm sorry. Like, what do you? Maybe that's it. It's like it feels like it's like trying to change a barber, but you go to the same barbershop and it's like, oh yeah, Mike, I'm not getting my hair cut by you today. I'm going to this guy. That's a very by the way, I'll give it to people. If that's it, I understand because that's tough. I had to switch barbers one time and it was a very complicated situation. I stopped going to the shop altogether, even though I could have gone to other guys in that shop because it's just an awkward conversation. Maybe that's it. Maybe people don't want to have that difficult conversation.
Uh, there are reasons for it. Money is an emotional thing.
Mm-hmm.
Okay. And taxes is emotional because it's connected with money.
Mm.
That's financial document called a tax return. It's one of the most important financial documents we have all through our lifetime, right?
Mm.
So there's that level of comfort that comes from I've been working with this person. But
Wow.
you are very correct. So one of the things we do is every January before the tax season starts, we do a webinar for our clients. We kind of prime them to know what to expect during this tax season, how we intend to collaborate and work with them and all that stuff. And this is one of the things I typically say to them. I encourage my clients once every 3 years to take our work product, which is our tax returns, and give it to another tax advisor to look
No
at.
way. You do that? That I respect that. So you're
Because,
putting your money where your mouth is.
yes, because it's so important that they know.
Wow.
It's my challenge. I'm throwing the gauntlet down, and I'm saying, I need you to do this. In the same, because for example, if a new client comes to us, one of the first milestones of what we do is review their last 2 years tax returns. And we are reviewing it not in a casual way. We're reviewing it for the purpose of saying, were there things that were missed? Were they significant? Were they significant enough to warrant an amendment that can put more money back in the pocket?
Wow.
So I do say that to my clients. So you are right. It's just this level of comfort. I've been with this guy. They've been doing my taxes. Most people, for as far as they are concerned, well, if the taxes have been done all these years and I've never gotten any notice from the IRS or that kind of stuff, then this person must be doing something right. No, that person may just be making you pay a ton boatload of money to the IRS reckless, like the dentist I told you. Okay, if she had saved that 54,000 in 2023, that's money she could have used to put into something else. When I'm talking of financial freedom, it's all about time value of money. You and I should know
Mm.
what we want to do with our money. Why go give the money to the government when the government did not ask you for the money? This is not about trying. I always say to people, you have no reason to even be playing games or cheating on your tax return because there's plenty of room to bring your taxes down. I mean, I work with people who are making lots of money. It's it's a zero tolerance for all our clients not to know where their tax position is going to be before the year end. They should not be knowing what that number will be when the tax return is delivered to them come April 15th. So if I'm
Mm.
the last client I talked to before jumping on this call, I'm like, dude, you're going to have about 2 point something million of net taxable income, right? And
Mm.
I'm like, okay, let's talk about how you can reduce this taxable income. because I had to frame it for him and say, what do you want to do? You have a choice. Do nothing and write the government this check for $2 million. And it's like, yeah, I don't want to do that. I'm like, okay, if you don't want to do that, because he was dilly-dallying about buying a building for about 11 million for his office. I'm like, you just said to me, you don't want to be moving, your business keeps expanding, and it will be best for you to buy a building. I said, so why not buy it this year, 2025? If you buy that building, whether for 11 million or 7, I had to break it down and say, look, whatever amount you put as down payment into that building, just by reason of bonus depreciation, by reason of doing the cost segregation, and it's going to be a self rental to his business. I said the government has paid your down payment because you will save more than the down payment in reduced taxes this year.
Wow.
So the government literally paid that down payment.
Right.
I said, so why do you want to wait till February? And as we were talking, he emailed me the 2 buildings that were sent to him to look at. So I'm like, go get it. I said, because otherwise you'll be writing this check come January.
Wow. That's so, and you see that at the end of the year. I want to come back to 100% thing because I feel like there was some value tied to that. But because we're on this topic, what are you seeing? I know a little bit. I'm just dangerous, and I'm learning so much from experts like you. It's currently November. I don't know how this happened so quickly. What are you seeing your wealthy clients do? Business owners, etc., towards the end of the year. I think this was a perfect example. Why is the end of the year important? Why do people make big purchases towards the end of the year? Can you help us summarize what that is for someone who's listening and like, end of the year? Why? What's the difference between him closing or her closing in December versus January? Can you help us understand that fiscal time period and why it's so important?
So just full disclosure, every client of ours, um, we have a commitment to meet with them at least 4 times a year.
Mhm.
The higher the clients are, that number increases to 6 or 8. Now, the Q4, from now to the end of the year, it's so important because at this point in time, you should have closed your numbers at least January to September. Okay. So there is more visibility into what your performances have been for the first 9 months of the year.
Mhm.
If your books are being worked on for October, it's easy to be able to do an estimate of what you think your performance will be for November and December. So the first thing every business owner must do, they owe it to themselves, is you got to have an advisor that you have a continuing communicative relationship with.
Mhm.
Because, like I said, you got to be able to know, if you don't do anything, what are my taxes going to be? And then if you're working with a good tax advisor, that tax advisor should not be able to look at your peculiar situation and say, okay, what can I do for this person? What levers can this person pull between now
Mhm.
and for December, right? That can still shift things for him. I mean, when I come on podcast, I give examples, but no names. I was talking with a pharmacist today who sold his pharmacy business in August. And his CPAs told him, well, you're going to have capital gains of 525,000. The business made about 600,000 net profit from January to August when you sold it. Here's the amount of taxes you have to pay. And he said, is there nothing you guys can do to kind of bring these numbers down? Well, it was all cricket. And I think he talked to one of his friends who is my client, who is a dentist, and like, go meet Michael. And we had a 2 hours conversation today. And I'm like, dude, okay, here are 1, 2, 3, 4, 5, 6, 7 things you can do. For example, he still has the business, even though he sold the asset inside the business, the asset
Mm.
being the pharmacy. And I'm like, okay, who were your employees? Okay, it's his wife, himself, and their daughter. Okay, All right. So the business is still in existence. All right. Did you pay? Did you hire your kids? No. I'm like, okay. What do you
Today
want?
they're hired.
So I was jokingly telling him, but he knew I was serious. I'm like, dude, because I told him what my fee is. So as I was talking with him, I'm like, I just earned my fee from just this one advice I gave you. My point is the fourth quarter is so important because there is more visibility to what
Mm,
your performance has been to that point in time. And then you can now, as a good tax advisor, really bring strategic advice. There are just lots of things. You heard me say it at the beginning. The tax code
yeah.
is for the business person.
Mm,
It's for the business person. I mean, I almost feel like the government is saying, you know what, all you business owners, you do such a heck of a job hiring people, taking this
yeah.
risk, believing that you can make it work. This is our gift to you, so that
Yeah.
you continue to do it. Because again, why is the government doing that? The business owners,
Incentivize
they are the ones that drive
the
employment.
economy. Yeah, they drive the economy. Um, it's so interesting that you say this. It's such a good reminder because we just made a big hire recently, and the first person I called was my CPA. I was like, "Hey, like, how should I structure this? Does this make sense? Like, I have to, because it's even before I even, hey, I'm about to buy another property. Is this like the way, like, a constant? And I think what I'm really appreciating this too, and honestly, it's gonna make me make it have another huddle before year end with him as well. I think what people are lacking is that communication throughout, and that's what business owners do. Like they have like, even when I was leasing my vehicle under my business, I called my CPA. Is this going to be okay? Like blah blah blah. Like, you know what I mean? Everything. So it's interesting. That's gonna, thank you for the reminder. I need to have another huddle
No, you
because you're
should.
making,
You should.
yeah,
It's
yes,
no, there's no that's. I mean, it's zero tolerance. It must be
yes.
done.
It must be done. No, it must be done. I mean, we just spoke again, but I'm gonna like have a very strategic huddle for Q1 and next year and how we're gonna look. Another thing I want to ask you is one of my business partners, she's a seven figure business, she's doing amazing. It's funny because we have this conversation and I'd love to hear your take on this. um she says that anytime she speaks to her CPA, there's like two conversations. Hey, this year, do we want to make a lot of money or do we want to have not made a lot of money? Like that, that's a strategic kind of conversation to have, right? And I mean, I see you reacted just now. Is that a good question or a bad question to ask?
It's a bad question.
Okay.
Okay, so I see that or I hear that every time. Um,
Why is that a bad question? I thought that was being proactive and being like, it's almost like the question of being, do I want to be bankable or not, depending on, because you have too many write offs, then you're not so bankable. But if you don't, then you are bankable for maybe a purchase. I noticed you had a reaction, so I want to hear. This
yeah.
is great. I want to
So,
learn
so,
from it.
so
What?
my
Why is
point.
that a bad? Yeah.
So, what's really every one of us goals? I mean, we all have passion for whatever we do to make money.
Hmm.
I mean, hopefully, because for me, you got to love what you do to have longevity and success.
Yeah.
So, I'm going to come from the premise of whoever that person is enjoys what he or she is doing, right?
Hmm.
Now, money you are making is your reward for bringing value and service to people.
Hmm.
So, I want you to see the framework from which I'm coming. Every time you are trying to not make money because you don't want to pay much taxes, what you are doing is you pretty much saying you're depriving people to whom you bring in value, right, of the service that they've come to appreciate from you that makes them willing to open their wallet to you.
Hmm.
And I consider that a spiritual thing. Okay. So to withhold my service as a tax advisor, because I don't want to make money beyond this particular level so that I don't pay more than this amount of
You're
taxes.
withholding a gift.
Yeah,
It's your
that-
duty and obligation if you have a good product to sell
yeah,
to the marketplace,
yeah.
essentially, right?
So that's my framework of it. So that's so wrong. That is an abuse or a misuse of my gift. I don't know what your faith is,
Mm,
but in the holy book called the Bible,
Yes.
There is the guy who was given one talent and he went and hid it.
Wow. Who is
Okay.
that? By the way, I'm curious. Not to make
In the
this
Bible,
about.
it's called the parable of the talent. In that
Oh, interesting.
story,
I didn't know
there
that.
were three people who were given talents. One was given one was given five, one was given 10. The guy with one, he went and dug his own talent under a hole and kept it there. The
Wow.
guy with five used his own talents and got five more. The one with 10 got 10 more. So, my point is, why would you withhold your talents and your gifting? Because really, for somebody to be willing to pay you money, they value the thing you bring into them. That's why
Mhm.
they're willing to do that. So, having put that away, if you are a business owner, I want to assume you want to get to a place of financial freedom, meaning you want to get to that place where you can come off the grind and allow money to be working for you. Okay.
Mm.
That's what financial freedom means to me. It doesn't mean retirement. It means I have the option not to work, but allow money to do the work that brings more money to me. Now, the way to get there is not to withhold or to produce more. The way to get there is to be very strategic. Earlier on in this show, I said to you, the ultra wealthy, they are very intentional about their taxes. They don't take their tax bill on the face value. And that was why I framed it for you to understand. Somebody is spending anywhere from 13 to 18 years of their life in the tax jail if there is no intentional planning.
Mm.
But to withdraw or to reduce your production or to reduce your gross income so that your net taxable income is reduced that year, it's not the way to do that. All that you are doing is you are just deferring that tax bill. Because the
Mm.
next year, I'm assuming next year you're going to try and make a whole lot of money, right?
Mm.
And then you pay some taxes. But again, it doesn't need to be so.
Mhm.
So you see, people say, "Oh, well, how are the rich doing it? Why they don't pay any taxes?" I'm like, yeah, there are many ways the code is available for
Yeah.
people. It's nothing illegal. It has to be legal. It has to be ethical. It has to be moral. If it doesn't meet those three tests, I'm not even interested in looking at it as a tax strategy.
Yeah. 100%. So tell me, going back, you said something because I know real estate, but I'm
Mhm.
also uh I'm going through this life experiment, as I call it. This right, where I'm an entrepreneur, right? Really, at the end of the day, I just happen to have a business that's in real estate as well, on top of real estate. But I certainly do not want to be one that has, to one that has a hammer. Everything looks like a nail, right? I want to have multiple tools on my tool belt. So enlighten me a little bit, just for my awareness and for those who are listening. You mentioned something about that bonus depreciate. I think you mentioned something about the 100% is being used in different ways. Can you maybe just like high level, because I could keep you here all day. I love this
Yeah.
masterclass. Just a quick high level, like how people are using it in different ways, even outside of real estate, that will just have a paradigm shift and an enlightenment for me. Because there's a lot of things that I don't know, my friend, and I
Okay.
want to learn.
Good question. I will give you
Yeah.
one without mentioning names. So when you're driving on the freeway, wherever you are going to see contractors walking left, right, and center as they using heavy equipment and all that kind of stuff.
Yeah.
Okay. I can tell you, for example, that at least 70% of construction companies
Mhm.
do not own the equipment, that those heavy equipment, whether it be the tractors, it be the whatever the names are, all of those equipment they use for most of this major construction, they are not owned by the companies that use them. Okay.
Mm.
However, we have major manufacturers of most of those equipments: Caterpillar, Komatsu, and many other folks like that.
Yeah. Cat,
Okay.
right?
So How do those companies get those equipments? One of the ways most of them get them is, okay, there are people who package this as a structured business, meaning they look for wealthy taxpayers, right? Who are willing to bring maybe 20 cents on the dollar. Let's say this Caterpillar costs $100. And they say, hey, Ruben, if you bring $20, Caterpillar, who is the manufacturer of this equipment, is going to finance the purchase of this equipment,
Mhm.
right? I'm giving you a framework and I'm giving you a
Yeah.
very real life situation. So you have brought in $20. You technically now own an equipment that costs $100. Yes, there is a loan of $80 on that equipment. Just like when you buy your house, the bank finances. The
Yes, sure.
bank,
Yeah.
the
Loan
bank
to value.
doesn't get the tax benefit. It's the person who has the risk of the loan that has the tax benefit.
Mm.
Now, when you participate in a strategy like that, you bring in $20, but you now own an equipment that the people who structure this deal, they rent out to these companies. All right? They are the ones that make sure there is insurance, the equipment are repaired,
Mm.
everything to make that business literally risk free to you because you put in $20, right? And then at the end of the day, whatever that $80 loan that is, they order that people, the people who structure this deal, ensure that that equipment is working. You are never on the hook to pay that $80. That $80 is paid out of the revenue coming from the rental income. But what happens to you that brought $20? You get $100 of bonus depreciation in year one. You put in $20, but you now got an expense deduction of $100. That $100, 99% of the time, such a person is in the 37% tax bracket. You make 2 to 4 times that $20 in tax reduction in year one.
Wow.
Okay. And that, see, the power of bonus depreciation, why we in the profession are so excited about it is really, yeah, it's a shift of income or wealth in a tremendous way for people who know how to use it.
That's crazy.
Yeah. It's a very significant shift because when bonus depreciation was reintroduced 2017, they put it on a sliding scale 100%, 80, 60.
Yeah.
It was supposed to come down to 40.
Yeah.
But with them making it permanent, at least until somebody comes to change the law, right? What they are saying is, hey, run for the hills, max it out as much as you can
Wow.
while it lasts. It doesn't have to be only real estate.
Wow. So in that situation, then I can get me as many cats as possible, right? Or at least I can
So
focus on scaling.
yeah. So for example, what did that example I just gave to you? Somebody could put 27,500 into one of those things.
Mhm.
They get an equipment that is worth 137,500, which is 5 times their 27,500. So if you take 137,500 multiply by 37% on the federal tax side, they will be reducing their taxes by 50,875. Less the 27,500 they invested into it,
As a
they
loss.
they are ahead by at least $24,000 net.
Wow. So that's a perfect example of, again, having a professional on your team who can understand that, to say, hey, before the year ends, you know how you have these big projects coming up? Why don't you think about, okay, interesting.
Yeah. You see, you keep using the right words. I don't know if that's intentional or you're just hitting on them. You use that word team. If I'm to advise anybody listening today, If you are an entrepreneur, you need to have a team.
Yeah.
You got to have a good tax advisor. You got to have a good banker or financier. You have to have a
Hmm.
good insurance person. You have to have a good corporate attorney. I mean, you got to really have a team. You said it's who, not how. And that's the
Yeah.
reality. Because without a team, investing is not an individual sport, it's a team sport.
Mm.
You and I cannot know everything. There are licenses I used to carry. Even when I carried those licenses, I didn't put myself out there as an expert in that area.
Mm.
But where I've chosen to be an expert, I have gone deep.
Yes. That is probably the best advice that, or it's so funny because I believe that some things are taught and some things are caught. And when I look at the people that I'm surrounded by who are doing amazing things like you are, right, and we're working at the top of your craft, it's going deep.
Yep.
I think what's happened, maybe you're seeing this, there's so much information, there's so many opportunities, the grass is greener, and people just stay at the surface level. But you know you know the generalist never makes more than the specialist, right? You really gotta go deep. So I think you displayed that today, that you are truly a specialist. And I can't tell you, I can't talk about how important it is. You've actually, it's so funny because I think a lot of the things that you start learning, like I read books everywhere all the time.
Okay, you are like me then.
Sometimes it's some things, but it's interesting because there's some things that and then there's some things, there's like conscious competence, there's unconscious competence, there's things that you don't know, and then there's things that you just need to be reminded of over and over again. And this is one of those things, right? It's like, yeah, you've heard this before, but are you doing it? And what's the difference if you know but you're not doing it? There's no difference between knowing and not doing something at all. So you got to do the thing, book the call, put get an expert on your team who, not how. Don't say, oh yeah, I've heard of it, because there's a difference between knowing and understanding. If you know something but haven't executed it, it probably means you don't understand it. So understand it and get an expert on your team like Michael here,
Yep.
who was able to just step in the lab. Thank you so much, man. I feel like, honestly, I was just getting, this was like an intro. I wanted to go in even deeper, but I want to be respectful of your time, because that's how much of a nerd that I am. I'm like, yeah, there's just a plethora of a wealth of information today that you shared with us, and so many good insights and reminders.
My pleasure. So again, that's why I do what I do,
Hmm.
and I think there needs to be a complete mindset shift in the minds of how business owners do business.
Yeah.
You cannot, if I'm to have any parting words, as a business owner,
Mhm.
you must make taxes to be one of your friends. Just
Yeah.
as cash flow is so vital to any business, taxes is every business single largest expense.
Wow. That brings the point home. Yeah.
So
And yeah.
why would you not be very intentional and very hyper focused on managing that one single largest expense? Because
Mm,
think about it. You pay property taxes, yes, income tax, there's sales tax, there's fuel tax. There are all kinds of taxes that goes out of our pockets every day. Some of them we can control, but the ones that we can control especially is our income tax. So
yeah.
to be cavalier about it, it's almost like, why are you doing that to yourself?
Self
I mean,
sabotage.
yeah, I don't want the Internal Revenue Service as an unwanted partner in my finances all through my life. And so there are ways within the tax code to minimize their activities or involvement in what you do legally. Again, everything I am framing it with that. It has to be legal, it has to be ethical, it has to be moral. And there are many ways to do that. There's nothing that makes you a more patriotic citizen than myself
Hmm.
because you're giving away money the government did not ask you for.
Mm, yeah. Yeah. Well, what is the, I want to give you an opportunity to say, if you could right now get us, I guess this is a two-part question. I think it's a good way to end the show here is if you, what are you most excited about from, this dynamic education that you are an expert, and you've been doing this for a while, but at the same time it sounds like you're a student of the game, and you're learning as well, and you're being that CPA that doesn't rest on his laurels and says, oh yeah, well, I got the certification, and this is how we've always done it. You're always, it seems like, reacting to the new evolving tax code. What are you most excited about that you can't wait to get on a webinar and tell all your clients, or one thing that you just at the top of your mind every time you get off the phone and you ask your clients about this, or you want to educate them on this? What is the something from the tax code that you're most excited around right now, maybe outside of what we just talked about today?
I, I know maybe my answer will shock you, but I will tell you.
Short cube, sorry, what was that?
I say maybe the answer will
Oh, will
surprise
shock me, will
you.
shock
Yeah,
me, yeah. Got it.
I would tell you it's AI.
Oh, okay, didn't know we'd go there. AI in
Any part of life and business, especially. Okay, because I mean, for any business, so I'll put it this way. I'm saying to my team members, because we don't call anybody employees, I'm like, if you are not actively
yeah, yeah,
leveraging artificial intelligence to
yeah.
become more productive, then I can tell you, you will be out of a job soon because your clients are using AI to even query and search answers to what they will eventually come back to us for.
Hmm.
It's going to literally revolutionize everything that any white collar worker is doing.
Yeah.
Robotics is going to change how we do things for the blue collar workers. I mean, think about it. You know what? 30 years ago, before the internet, we didn't know this is how we're going to be able to work, right? I mean, I run a virtual practice. My clients don't care where I am now,
Yeah.
right?
Yeah.
Because we've been able to leverage technology. The internet transformed how we do business today.
Yeah.
AI is going to even do that in a way that many industries are going to stop existing. Can I shock you even more? A tax return may be costing less than $100 3, 4 years from today. So, if as a CPA, for example, if you build your business all around preparing tax returns, that's the AI will do it better than the human being.
Hmm. That's so interesting hearing that from you. So what are you telling your what's a message for the CPA out there who's listening to what you just said in 2025 Q4? What should they start thinking of if they want to stay relevant in this space?
What they should be focusing on is how to bring value that is not compliance related. My clients want to literally ask me questions before they make any decision. And many CPAs are still just sitting there wanting to just wait, collect source documents to prepare tax returns at the end of the year. That's not what any business owner needs tomorrow. A lot of the things that we are doing now, AI is going to start doing them in no time. The business owner wants to have a tax advisor who understands their business, who can truly bring value that is not just preparing a tax return.
Hmm.
The client I met with last, before I came on this call, what was his last question for me? I mean, this is a guy who is he's grossing about $7 million, right? Well, he was like, okay, so how much bonus is enough to pay my staff this December?
Hmm.
That was his question. And he genuinely wanted to hear my feedback, right? If I get casual with that question and I say to him, anything you like, I am just saying to him, I have nothing valuable to bring to him because he sees me as a financial expert. So I said, hey, dude, I am going to check the benchmark for your industry.
Mm.
Okay. Let me see what the top 10 percentile pay as bonus. Let me see what the people at the middle pay, and let me see where. And then I'm going to match you with people in your space in terms of gross revenue. Because remember, we're talking of human beings. The same people he wants to pay bonuses to, they have the ability to migrate from his office to go work for his competitor.
Another. Yeah.
So if he's not matching what is good, he's going to
Mm.
lose his employee. So my point is AI is going to transform a lot of things. Now, in the past, doing that research for him may have taken me 4 or 5 hours, right? But it
Yeah.
didn't take me 4 minutes after we finished that call. I went into one of my tools and I'm like, hey, this is the industry, this is the revenue base, this is the net profit. What is the industry in Southern California as end of year bonuses? Boom. No, I didn't get some vague answer. I got answers based on, hey, for the C-suite, this is percentage for people in this level.
Wow.
Now I come back to him as a hero
Mm.
because now I've given him actionable intelligence.
Mm.
So that's
Wow.
why I said maybe my answer will surprise you because I wasn't going to tell you
No, I
taxes.
love that. I'm so happy to say that. That I think that is exactly um you know how any business owner should be thinking, and this just shows me how shrewd you are in being able to already see the around the corner,
Yeah.
and being proactive. Yeah, that's awesome. Well, listen, Mike, man, I could have you here for another hour. I feel like
I
I
am
just
going
you
to watch
spending time with you
basketball.
here. Yeah, yeah, we got some games to watch. The NBA season is back. So listen, where can the people again find you? Again, you're you have plethora of knowledge. You're the you're sorry, co-founder. You're the founder of Smeed. Is it Smeed, SMEED? The how
Yes.
you pronounce it, Smeed? What does that stand for something?
Yeah. It's the SMED, SMEED. It's an acronym of me, my wife, and our kids.
Ah, figured. I felt like there was something there. That's I wouldn't expect anything less from you to have it tie it back to the family. You've been doing this for 20 years, and
Yep.
it sounds like you're just getting warmed up because you're
Thank
actually
you.
still. So I love what I'm seeing. What's the best way for people to stay in touch with you? I know I'm certainly going to lock you in as a contact. I might even have to, hey, listen, I got to keep my CPA competitive here, and we might have to you see some returns and possibly see how we can get some business over to you. But what's the best way that others who are listening could get in touch with you and your team?
So we have just because I do a lot of podcasts, we have an email taxes. T
Mhm,
as in Tom, A as in Apple, X as in zeros, E as in Edward, S as in Sam.
mhm.
Taxes at smidcpa.com. That's
Taxes at smeedcpa.com.
yeah, that's an easy way to get a hold of me. It's monitored by our marketing uh, expert, and when he sees things come through from there, um, he calls it to my attention. My assistant will look at it and reach out to that person and either schedule them or give them a link to my calendar. Now, a link to my calendar really is not the greatest because honestly, I'm booked out 2, 3 months out. So I try to keep on Wednesdays of
Mhm.
each month purely for marketing or business development
That's perfect.
activities. It's
Yeah.
not a surprise that we're doing this on a Wednesday because it's
I like this. By the way, I need to structure my. I have somewhat of that, but I've seen some heavy hitters in my space structure. Very. This is sales calls day. This is a meetings day. This is a media day. I like that. I might have to take a page from your book. I like that.
yeah. So Wednesdays are my marketing days, right?
Yeah.
Those are days I try to focus 100% on marketing. Yes, because this is Q4, and I'm really trying to make sure that every of our clients, their tax plan is taken care of. I have
Mhm.
done some work today, but most times once something hits that email, they schedule the person for one of my Wednesdays and we talk. We are not in the business at this point to just grab every client that
Yeah.
comes.
Yes. Align.
We want to make sure we are the best fit or a great fit for somebody, right?
Mhm.
I I make a distinction between a business owner and an entrepreneur.
Mm.
We like to work with entrepreneurs. There are people who are business owners, they are successful, they are profitable, but if they are not enterprising, we may not be fun people to work with for them.
Oh, I like that. Enterprising. I That's interesting. I'm gonna do my homework because now that you mention it, business owner versus entrepreneur, I don't know that I would be able to define the difference.
I'll leave you with that assignment.
Leave me with that. Leave me with that. Listen, thank you so much. Taxes at smeedcpa.com. Make sure you plug in. I had a pleasure of being with you here, Mike, today. You are just so fun to be with, and I've learned so much. I feel smarter walking away from this, but the
Thank
job's
you.
not done. We got to go ahead and execute. So,
All
with
right.
that said, Experiment Nation, just like that, you've heard it. The man himself. We are out. Experimentation. I believe there are two critical components that will help you achieve your goals very quickly and succeed. Number one, it's information like this that you received on a show, in an episode, and content that you can find on my YouTube channel or anybody's channel. And then there's a community. And the way we've been able to expedite our process, the way people in our community, people that we consult, mastermind members, whoever, they get the information on an episode like this, but then they also have a support, whether it's me guiding them or being guided through a community. There is an opportunity for you listening to be able to expedite your process or even expedite your results that you're seeking by being in part of the community. If that is what you're interested in, we at Experiment Nation happen to have a community devoted to helping maximize your occupancy and your profitability altogether, regardless of which market that you are in. And for that reason, you have an opportunity where you can go to experimentrealestate.com/submit if you're looking to work in an environment that can help you prosper faster. Call out any areas that you might not be familiar in, especially the blind spots. That's where a guide comes in hand, and I would be a pleasure and honor to be your guide. But in order to make sure you're a good fit, make sure you go to experimentrealestate.com/submit so that my team can go ahead and take it and see if you're a good fit to join the mastermind and the multiple programs that we have. In addition to that, I'm also now a YouTube partner, which means that I want to give you more access to information, more access to Q&As, more access to the questions that actually come out of our mastermind to help people expedite the process. We've seen people get anywhere from $4,000 to $5,000 to $6,000 to even $7,000 a month net on just one door by applying the strategies that we use by working with corporations and furnished accommodation in a very strategic way. So if you're interested, make sure you also subscribe, because I'm going to have different tiers that's on YouTube now that we've become YouTube partner to continue to be the bridge to your success in your lab. And your lab means your life, your goals, or wherever you're trying to head. So make sure you also hit the subscribe button on my YouTube channel. That's youtube.com/real estate experiment. We'll be there. You can also look us up at midterm rental insurance experiment. We will be there. Make sure you hit the subscribe, because that's when you'll know
the tiers that are available to you that make sense for you, your marketplace, for your results. Remember, you're only one experiment away. Let's build.